That's your money saying it's time for a McDonald's run. Because with new McValue at McDonald's, you get more than you expect. Like buy a 6-piece McNuggets and add a McChicken for just $1. Your money says let's go. Get more than you expect with new McValue. Prices and participation may vary. Valid for item of equal or lesser value.
Reality radio for a really great future. We're talking real money.
Wow. Hi. Been traveling across the country. Whew, worn out. Boy, have I been traveling. Hello, everyone. Don McDonald here. And where is here? Gillette, Wyoming, actually. I am sitting in a Fairfield Inn in Gillette, Wyoming as I drive across the country. I'll tell you more about this fun story later. Tom is on vacation. He's over at Lake Chelan, as he does annually. I'll be joining him there for a few days in the middle of the week. That's the direction I'm heading. And we're here every Saturday to try to do something specific. Help you enjoy a better life. I know we talk about money, but money is the means by which we fund and fuel that better life. If you don't have money, you're going to be missing out on a few things. I'm not saying you need to be billionaire rich because the odds of that happening are slim to none. I'm not even saying you need to be multimillionaire rich because the odds of that happening aren't particularly high. But I am saying that you need to find a way to earn money. And you know how to do that. To save it, you're okay at that. Maybe to spend a little less, so you're better at that saving part. And how to build it, how to grow it, how to turn money into something more valuable, because there is an entire industry, trillions and trillions of dollars involved, that is devoted to paying you to use your money. It's all in how you do it. And that's the rub. That's the real problem, is how you do it. And so we have this little show that in one way, shape, or form has existed since 1988 to help you invest a lot better, along with all those other things. But the real trick is getting this investing down. And it's not easy. It's really not easy. In fact, I want to share a little story with you about how easy it isn't and how discouraging it can be. But I want to give you a number first, because the show is about things that are important to you. So I need you to call me with questions, even though it is a beautiful August weekend in the Seattle area where most of you listening are. Some of you aren't. Some of you are listening online elsewhere. But I know who wants to call a talk show when we're out by the lake watching the Blue Angels or the Thunderbirds. Which is it? I think it's Blue Angels out there, isn't it? Yeah. Okay. 855-935-TALK is our phone number. That's 855-935-8255. And since it's summer, we do tend to do the summer bribes to get callers, because callers make the show more interesting. I can talk for 2 hours. I'm good at it. But I really want to help you individually, because, and a lot of your individual calls help others. So I've got the best bribe ever this weekend. The best. It's a double feature bribe. Ready? Here's what you're going to get. You're going to get a free ticket to one of my brand new classes called Good Help is Hard to Find, about finding the right kind of advisor. And I'm not talking about us. We'll show you how to find the right kind no matter who you're dealing with. But not only do you get that, but these events are what we call brunch eds or lunch eds. There's one on Saturday, August 10th, and one on Wednesday, August 14th. The brunch eds on Saturday, the lunch eds on Wednesday. So not only will you get this great brand new class that I just invented and I'll be doing in person in Bellevue, you're also going to get a lunch or a breakfast. So if you call, but you got to call the show at 855-935-TALK, and you've got to call with a question. You can't just go, oh yeah, I want to go to the free thing. No. You have to do something for this. It's not really free. You have to participate. So give me a call, 855-935-8255. Join me out here in Gillette, Wyoming. Been traveling across the country for a couple of weeks. Started in Florida at the beginning of July, then went up to Charleston, South Carolina, visited my wife's family near Myrtle Beach, South Carolina. Then we went up to visit more of her family near Blacksburg, Virginia. And because my wife is a Hokie, she went to Virginia Tech, and her brother lives there. And then our Airstream broke down in Virginia. The 12-volt system just went haywire. So we called the nearest Airstream dealer, which was in Ashland, Wyoming, near Richmond. And the soonest they could get it into the shop was August 25th. So guess where our Airstream is? Yeah, Ashland. That's right. So we're traveling across the country in our car. Well, our Armada. And we'll be in Seattle really soon, so we want to see you out there, and I also want to talk with you. So give me a call at 855-935-TALK, 855-935-8255. This is real help for real issues to make your life really better.
Tom and Don are talking real money.
Do you need a little help with your investments? Set up a free, no-obligation appointment with one of our advisors at TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
Hi again. 855-935-TALK is the number. I'm Don McDonald. Tom is taking a well-deserved vacation with his family at beautiful Lake Chelan, where I'm going to visit him for a couple of days next week. And then, it's, of course, when I get there, it's going to be 100 degrees because apparently I bring that with me from Florida. 855-935-TALK is the phone number here, 855-935-8255. And this week, this show, this day on Saturday, you have to call live during the show. That's the only way this works. We have an extra special bribe for you for calling and asking a question and helping yourself out and helping other people out. And you get to come to... Oh, there goes the air conditioner in the room. And you get to come to one of my new classes called Good Help is Hard to Find, How to Find a Fiduciary Advisor and Why You Need One. And you also get either a breakfast or a lunch included. And so, you get a good deal. So give us a call, 855-935-TALK. And, oh, by the way, if you do call in and do get the tickets, we'll call you next week and get the particulars because it takes too long to do it this way. All right, let's go to the phones. Christine, welcome to Talking Real Money.
Hi.
Hi, Christine. What's up?
I'm coming into some money. My position has been eliminated, so I'm getting a nice severance. And I'm going to come into about an extra, after I pay some bills off, about $10,000, and I'm trying to figure out what to do with it. I'd like to do some investing. I can roll it into my 401k, or I could do a CD. I'm just trying to figure out the best way to use this money so that I have some investment opportunities.
Okay, cool. How old are you?
I am 53.
53. And you have money saved, a decent amount saved for retirement? Over and above this? Yeah.
No, not a decent amount.
When are you thinking you might consider retirement? How far down the road?
Late 60s. I enjoy working. I'm not going to be someone who hits 63 or 65 and stops. I anticipate I'll be doing something into my late 60s, possibly even my 70s. Yeah,
those of us in our 60s, we're still really young, apparently, inside at least, maybe not on the outside. Okay, tell you what, this is money that ought to continue to be put away for the long haul. You got a 401k that is already tax deferred, I would assume. It's probably not a Roth 401k. So what I would do,
I roll it over.
Oh, you're gonna do the transfer and pay the taxes? You're gonna do the transfer and pay the
because it's an employer-sponsored account, so I don't have many options in terms.
Well, you can go into a regular IRA. You can go into a regular IRA and avoid paying taxes, or you can put it into a Roth IRA, pay taxes, and then it grows tax-free from that point on. That's a question you probably need to consider for a little while looking at your tax situation. But what I would do is put the $6,000 for this year into a Roth.
Okay.
And then next year, put that $4,000, just put it into a good investment like the one you're going to use for your Roth. And then next year, put that into the Roth right at the beginning of the year. So the whole thing will be in a Roth as of 2020, part of it in 2019. Sooner you do this, always the better, in my opinion.
Okay.
Then to determine how much risk you need to take, I think at 53, you're still in a position where you can take quite a bit.
Yeah.
I know I was at 53. And I think an 80-20 portfolio for a lot of 53-year-olds who are really trying to build wealth is not outrageously risky.
Okay.
But what I would probably suggest, go to talkingrealmoney.com. Take our free, no obligation, nobody will bug you risk quiz. See what that says, and be a little, maybe a smidge more aggressive than that. Use the Vanguard Total World Stock Index Fund for your, which is VTWAX, and then the Vanguard Total Bond Fund for the safer portion. So if it's 80-20, you have 80% in the stock fund, 20% in the bond fund.
Okay, great. I appreciate it.
Leave it alone, and when you add, you do a little rebalancing. But it's just really, these are really straightforward, incredibly inexpensive funds. You're going to pay about 0.75. No, you're going to pay probably about 0.8 or 0.9% a year. It's tiny.
Okay.
Okay?
Okay.
Good luck,
Thank
Christine.
you so much. Thanks.
You're very welcome. Thanks for calling. 855-935-TALK. That's the phone number here. 855-935-8255 for questions about the money matters that matter in your life. And you can come to one of my two brand new classes, either a brunch ed or a lunch ed, coming up August 10th or August 14th. Good help is hard to find is the name. Kathy, you're next. Welcome to Talking Real Money.
Hi.
Hi, Kathy.
I can't hear
What's
myself,
on
so
your
okay.
mind?
Well, my husband and I are going to have some life changes. We've decided to mostly semi-retire from our careers right now and move away to a smaller community. And both of us are in our...
That sounds so familiar, Kathy. My wife and I are doing the same thing.
Oh, awesome. Yeah, we're really excited. We just... I'm going to retire fully from the state in a little over a year and a half, and my husband's just going to go ahead and cut his losses at about 25 years. And he's also kind of a state employee. He's a teacher. So he has a TERS 3, so a partial investment portfolio, or I don't know what you even call it, retirement.
It's a retirement plan.
Okay, so I don't know how to help him decide what he's going to roll that money into when he retires. But also, we've never invested. I don't have a single investment. He doesn't. Other than that, he doesn't have a single investment. And so we're really starting from scratch and don't even know where to start.
Okay, so you have the retirement plan from the state. He also does. Okay. So PERS 3, it's both a defined contribution and a defined benefit, if I remember correctly, right?
Yeah.
So he's going to get he's going to get a bit of a pension, and then he's going to have money that can roll into an IRA, which I would actually probably consider doing, but you don't need to do anything right away. This is the nice thing about your situation. You can let those accounts ride for a while. You don't really have to do anything.
Even though he's severing, he's still that just can hang out.
The money can remain in the accounts after he leaves.
Okay.
So you don't have to rush to do a rollover, but you do need to start learning what you need to know to do this properly. And it's actually a really, really good thing you called, because if you come to the class, one of the classes, I'm going to show you how you find the right person. And that's really the key when you've never done it before. You need some guidance.
Tom and Don are talking real money.
It may not be the sexiest website in the world, but it's your one-stop shop for real money information, talkingrealmoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Love to talk with you about your financial situation. I'm Don McDonald, 855-935-TALK. That is the number here, 855-935-8255. And I misspoke. I forgot to put a 0 in. Vanguard, their index, their total market index funds, their total bond, their total world stock, have fees between 0.05 for the bond fund, 0.05 to 0.1 for the stock fund, which means that on average at an 80% portfolio, you're going to have about a 0.08 or so. Zero. That's less than, it's ridiculous. It's less than a penny on the dollar. It's not a lot of money. And also for Kathy, just one last note, Kathy, the PERS Plan 3 account, again, this is not something that has to happen right away. You don't have a ticking clock. That money can stay in there and continue to earn money. It may be that you're better served putting it elsewhere, but that's something that you need to determine down the road. And I believe you need to determine with help. From whomever that help comes, you need to make sure that it's really good help because, and this is what I was talking about earlier in the hour, my wife was reading an article that someone wrote, a blog, about getting financial advice, and they said, oh, people are always telling you to go out and get an expert to help you with your money. But most of the experts end up costing you more than they end up making you. And this guy said, I feel like I have to work 2 jobs just to support me and my advisor. And the reality is, well, that's a bit extreme. It's not too terribly far off the mark. There was a recent article in the New York Times, and the headline was, investors are usually wrong. I'm one of them. And while we may think we're very good at everything, when it comes to investing, most of us are very, very bad at it. I'm going to share some numbers a little later on with you that will I hope, will at least push you into the I probably need some help camp. 855-935-TALK, 855-935-8255. Mark, you're next. Welcome to Talking Real Money.
Thanks, Don. Appreciate it.
Hey, Mark, what's up?
Well, I've saved $20,000 for the past couple of years. I was going to use the money for a specific thing, but it fell through. So I don't need the money for the next 3 years. What can I put the money into, for about a span of 3 years so I can go ahead and later on pull it out to use it for what I want to use it for?
Okay. Does that 20, absolutely, no doubt about it, need to be there in its entirety at that point? In essence, in other words, no risk whatsoever?
Yeah, actually it does.
Yeah, okay, then that leaves us. Is your time frame, is the 3 years an absolute, or might it be 1, 2, 6 months? Could it be shorter than 3 years?
It's going to end up being 3 years, but if I had to, I guess I could only go 2 if I needed to.
Oh, no. 3 is good. 3 is good. 3 is better. 3 is better, but you're not going to like what the answer I give you. Because
it's better than the answer I have right now.
I bet it isn't. Because the problem is it has to be there at the end. If you can't, returns come from taking risk. And if you have a riskless investment, the only thing you're really giving up is that time factor. And so I got to tell you, what I would do is go to someplace like bankrate.com and just shop for the very best CD rates in the country and probably put it in a contact some of those banks. You might get 2.5%, maybe 3% on a 3-year product with that amount. But I just do some calling and put it in a CD.
Tom and Don are talking real money.
Just about everything you need to know about money can be found at our website, talkingrealmoney.com.
Reality radio for a really great future. We're talking real money.
It's important stuff we talk about every Saturday here on this show. I'm Don McDonald. It is summertime. It is absolutely beautiful. It's really hot in Gillette, Wyoming. And then I hear it's going to be 100 degrees when I get up to Lake Chelan where Tom is. He's on vacation right now. I'm driving across the country, but somebody has to do this, so I'm here in a hotel room, Fairfield Inn. I'm doing the Marriott thing. I'm trying to get to Platinum, so I was going to be in an Airstream, so now I'm in Marriott's. 855-935-TALK. That is our phone number. As a matter of fact, that number works 24 hours a day, 7 days a week. But there's a bonus if you call during today's show and ask a question. I have a brand new class that, as a matter of fact, I'm not even done creating yet. I have the whole outline for it. I just have to fix it up. It's called Good Help is Hard to Find. It's all about how you find the help you need to make the money you need without spending a fortune and doing stupid things along the way. And a lot of these people who give you financial advise really stupid things, let me tell you. And finding a fiduciary, somebody who's always looking out for your best interests, it's really hard. So I've got these two classes coming up, one on the 10th and one on the 14th of August. They both include a meal, breakfast or lunch. They're just 1-hour classes. They're short. We'll have a little time afterward. We can help you figure out if your advisor's a fiduciary. And if you call today and ask a question, we'll get your number off the screen from call waiting unless it's not there, and then we'll ask you for it. But then we'll call you back next week and get you a free ticket to one of those two classes. So you'll get a lunch and a class absolutely free. But you need to call us at 855-935-8255. Now, why do you need advice? Well, there's a company called Dalbar, and we've quoted their numbers for a long time. I've got this from an article in the New York Times last week by a gentleman by the name of Jeff Sommer, who's a writer for the Times. And the headline is, "Investors are usually wrong. I'm one of them." We don't like to admit that we're wrong. We don't like to admit that we're bad at anything. But when it comes to investing, most of us stink at it. And you know how you know if you're a good investor or a bad investor? Do you ever ask the question, either to others or in your own little inner conversation, gee, I wonder what the market's going to do. I feel like it's going to go up. I feel like it's going to go down. If that's you, you're probably a bad investor. And the vast majority, don't feel bad, you're in good company. The vast majority of investors are bad investors, and study after study after study proves it. But Dalbar does these studies every year, and their latest one was through December of 2018. And what was interesting is they found out that through December of 2018, someone who invested 30 years prior, that is in 1988, and they invested conservatively. They were just bond investors. They just wanted what the bond market gave, but they thought interest rates are going up, interest rates are going down, and they got in and out. Well, over that 30 years, the average bond mutual fund investor earned, get this, just over 1/4% per year. No, that's before inflation. And inflation was 2.5% per year. So net, those people lost 2.25% per year to inflation. 2% or more. Now, how did bonds do over that period? According to the Bloomberg Barclays Aggregate Bond Index, they made 6.1% 1% per year, or just under 4% a year over inflation. If you'd owned the Vanguard Bond Index Fund, which was there the whole time, you would have earned, after fees, about 6% a year. Whereas the average investor lost money after inflation and net earned 0.25%. That's awful. That's just terrible. And stock investors didn't do any better. And I'll have those numbers for you in just a couple of minutes. 855-935-TALK is the number. 855-935-8255.
Tom and Don are talking real money.
Download the advisor interview form and find out if your advisor's a fiduciary at talkingrealmoney.com.
For your real life and real future, Tom and Don are talking real money.
Only because it's really important. How you manage your money determines in large part how comfortable your future is going to be, particularly your retirement. You can call me and ask questions about money, about saving it or spending it or particularly investing it at 855-935-TALK, 855-935-8255. And if you call during the live show on Saturday, if you're listening next week on the podcast, doesn't count. If you call during the live show on Saturday, we'll make sure that you, in fact, we'll even let you bring a guest. You and a guest will be able to attend for free one of my 2 new classes coming up the 10th or the 14th of August in Bellevue. These are small classes. They're only 1 hour long. It's called Good Help is Hard to Find. It's a lunch ed or brunch ed event, which means you get a meal too. And that's included. You don't have to pay for that if you get the free one. Otherwise, if you come to, there's a cost. Basically, we want you to pay for the food. 855-935-TALK is the number. You get that for free. We get your number when you call. Don't worry if we don't ask for it. That just means we have it on caller ID. And we'll call you next week and get you set up to attend one of those 2 classes. And again, they're very small. I think you'll enjoy it. Brand new. I'm just creating it. 855-935-TALK. Before the break, talking about how badly investors have done over a long period of time. And that's the kind of numbers you want. You want more data is better than less. And Dalbar determined that bond investors, the average bond investor, based on their study of all the transactions, the average mutual fund bond investor only made 0.25% per year over the past 30 years, losing money to inflation, while bonds themselves returned about 6% per year through the Vanguard Bond Index Fund. Stock investors actually did do better than inflation. So, over that 30-year period, the average stock investor put their money into stocks and then they pulled it out when they thought things were going badly. Think about it. 30 years for the stock market. That includes the 2000 crash, the dot-com crash, the 2008 crash, the 2018 crash. We forget that 2018 was a terrible year for stocks. It was within a fraction of a percent of being defined as a bear market. So we've had bad markets and good ones. And had you just invested in the S&P 500, which we think is still too narrow, still not the right way to invest, but had you just invested in the S&P 500, and remember, from 2000 to 2010, the S&P 500 made 0%, in essence, your average annual return would have been 10% a year. Not bad. What did the average investor do over that same period, according to Dalbar? 4.1%. Why do you need help? That's why. Left to your own devices, you're not likely to do very well. But the trick is finding the right advice, which is why I created this class. 855-935-TALK is the number. And Patty, you're next. Welcome to Talking Real Money. Oh, Kathy. I thought you said Patty. Kathy, I'm sorry. Hi, Kathy.
Hi.
Hi. What?
Hi.
Sorry, I got your name wrong.
That's all right. In fact, your operator asked me if I had called before because I'm the second Kathy in the broadcast here. So.
Oh, yeah, that's right. Here we had Kathy before. I'm looking at my notes here.
Yes.
What
I don't
can
know
I do
how
for you
she
today,
spelled her
Kathy?
name, but I'm Kathy with a K. Anyway.
Kathy with a K. Got it.
Yeah, and I do need help. We were, all of our money has been in stocks, and in 18, as you said, we lost a lot. And then we, of course, had lost a lot before that. So I convinced my husband to pull it out and just put it in the blank account. In other words, it's not gaining any interest. It's not doing anything. It's just sitting there like I had it underneath my mattress. Anyway,
Right.
My husband thinks that we should be still investing in the stock market. We don't have a whole lot of money, and so it scares me. Every time we lose something, it scares me. We're left right now. We're left with about $16,000.
Wow.
And that's it. We don't have a retirement
That's your whole
fund,
life.
That's our whole life. That's our whole life.
How old are the two of you? Round numbers.
Husband is 77, and I'm 70, almost 72.
And this money, I assume, is mainly for rainy day purposes, right?
That's it. We had originally.
Do you have enough to live on?
I'm sorry?
Do you have enough income to live comfortably or survive?
Well, we have enough income to survive, and that's Social Security.
That's all you have?
That's it. We had originally planned,
I got it. Yeah, go ahead.
Okay.
Yes.
Over our
planned.
lifetime, we were going to use our home as our retirement. And then that's when it hit the skids, and we actually lost our home after 37 years.
Okay. This is sad.
Very
I'm
sad.
so sorry. It's very sad.
I'm trying not to cry right now.
I'm trying not to join you. Let me. I've got to side with you on this, even though I fervently believe that being in stocks is the right way to go. Despite the fact that stocks went down in 2008, despite the fact that stocks went down in 2018, stocks have over the last 10 years, 20 years, 30 years, made more money than any other asset class.
Agreed.
They've done well. But you're in your 70s. I would take absolutely no risk whatsoever with that money. And what I would probably do just to eke out, well, I shouldn't say absolutely no risk, very, very little risk. Because there's one place you could go where you will not lose all of the money. You can't lose all of it. You can't lose half of it. You can't lose 25% of it. You might lose 4 or 5 or 6% in a really bad period, but you probably won't. And that is a bond fund. And to get you a little bit more income, just to eke out a little more, I would take a look at the Vanguard Total Bond Index Fund. Just go to Vanguard.com and look it up. It's gonna get you up close to 3% a year. It's gonna have a little bit of volatility, but live with that and use that income.
Tom and Don are talking real money.
Would you like to talk to a real investment advisor for free? Set up an appointment at TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
I only have 5 seconds, so come to my class. I'm driving all the way to Seattle. I'd love to see you at one of them. Go get tickets at TalkingRealMoney.com.
We hope you realize that the information provided on Talking
Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That should keep the lawyers happy.